Welcome to the Deep Dive. We sift through complex information, like earnings calls, to pull out what you really need to know.
Exactly. And today, we're digging into Novartis's recent Q1 2025 earnings call.
Our goal here is to break down the key numbers, what management actually said, and those important guidance updates.
Yeah, they really kicked off the year strong. It set the stage for them to actually raise their full-year outlook.
Okay, so let's lay that groundwork for you. What were those headline results that got everyone's attention?
Well, right off the bat, sales saw really impressive double-digit growth. We're talking 15% up for the quarter.
15%, okay.
And that strength flowed right down. Core operating income jumped 27%. Pretty strong leverage there.
So better margins too.
Definitely. Good cost management pushed that core operating margin up to 42.1%. That's 400 basis points better than last year, a big jump.
And bottom line, earnings per share, cash flow. How did that look for you?
Core EPS was up a solid 31% year over year, hit $2.28. And cash generation was, frankly, robust. Free cash flow came in at $3.4 billion.
Wow, that's...
Yeah, up 66% in US dollars. So you can see why they felt confident enough to, raise the full year guidance based on these numbers.
Now, you mentioned that 15% sales growth, but I remember there was a bit more to it, something about gross to net adjustments. Can you unpack that?
Absolutely. That's a key detail. So reported growth was 15%, yes. But management pointed out that about 2 percentage points of that came from favorable gross to net true-ups.
True-ups meaning?
Meaning adjustments relating back to 2024. Mostly, it seems, from lower than expected U.S. Medicaid use and just a better channel mix than they had initially estimated.
Okay, so the underlying business growth was still strong then.
Oh, absolutely. Underlying growth was still a very solid 13%. And importantly, this better outlook on those revenue deductions, the gross to net, that factored into their decision to raise the full year guidance too. It wasn't just the brand strength.
Got it. So excellent core performance, plus a bit of a tailwind from those adjustments, giving them better visibility, right? So let's talk about that guidance. What does the updated 2025 outlook look like now for you to consider?
They've tightened the ranges and nudged them up a bit. Net sales are now expected to grow high single digit. That's up from their previous mid to high single digit.
Okay. And operating income?
Core operating income, they're now guiding for low double digit growth. That's an improvement from the high single to low double digit range they gave before.
And what are the big assumptions baked into that, especially around generic competition hitting soon?
Yeah, that's crucial. Their guidance still assumes generic entries for Tasigna and Promacta, and importantly for Entresto in the U.S., all hitting around mid-2025.
Mid-2025 for Entresto. Is that locked in?
Well, they were careful to say that the Entresto timing is still subject to how the litigation plays out, potential settlements. So there's some wiggle room maybe, but for planning, mid-2025 is what they're using.
Right, in currency, what's the assumption there for the full year?
Based on late April rates, they're expecting a neutral impact on sales, but about a negative 2 percentage point hit on core operating income.
Okay, let's shift from the overall numbers to the engines driving them, the key brands. Management seemed pretty bullish, framing this momentum as proof they can handle upcoming patent cliffs, the LOEs, and keep growing into the 2030s.
They really did. They talked about strong, broad-based growth across the portfolio, and that's, essential if they're going to hit that midterm guide of 5% plus growth and keep it going.
Let's start with Kisqali, their breast cancer drug, the CDK4/6 inhibitor. What's the story there? More than just the headline number?
Kisqali was really impressive. 56% growth in constant currency, so taking out exchange rate effects. Management kept emphasizing its position as the preferred CDK4/6 globally, not just in metastatic, but in early breast cancer too.
Preferred globally is a strong statement. What specifics did they give, say, in the U.S. versus outside the U.S.?
Well, in the U.S., growth was a staggering 87% in Q1. And they've really cemented their leadership. They're number one in new patient starts, NBRX, in metastatic disease, with 48% share, and now tied for the lead in total prescriptions, TRX.
And early breast cancer.
Even stronger momentum there. NBRX grew 65%, hitting a 60% share. And they made a key point. They reckon about 56% of that early breast cancer volume comes from patients who fit the exclusive part of Kisqali's label. That highlights its differentiation.
Okay. And outside the U.S.?
Growth was 24% constant currency there. The early breast cancer launch is still ramping up internationally, but they're already the metastatic leader in 10 top countries with 46% share. Plus, strong guideline support globally, NCCN, ESMO. It all backs up their belief Kisqali is heading towards over $8 billion in peak sales.
Right. Switching gears to Kesimpta for MS, how's that doing and what's the big draw for you, the patient?
Kesimpta grew 43% constant currency. It's significantly outpacing the B-cell market and the overall MS market. Strong sales both in the U.S. with 41% TRX growth and outside the U.S. too.
Where it's leading in new prescriptions.
Yeah, leading NBRX share in 8 out of 10 major markets outside the U.S. The real selling point they stressed, and the key differentiator for patients, is the convenience. It's an at-home, self-administered treatment.
And the future for Kesimpta? Biosimilars are eventually coming, right?
They are. So they presented 7-year data, which reinforces the benefit-risk profile, which is obviously important. But they're also working on life cycle management, specifically studying if they can increase the dosing interval.
Less frequent dosing.
Exactly. If they can offer that down the line, it could really help extend the franchise life beyond when U.S. biosimilars are expected, probably early 2030s.
Okay, Pluvicto. The radioligand therapy for prostate cancer, that feels like a really big focus, especially with that recent approval. Q1 results first.
Pluvicto grew 21% in Q1. But yeah, the absolute key focus now is laying the groundwork for the pre-taxane launch. That's for the PSMA positive patients, following that crucial FDA approval back in March for the earlier setting.
And how's it doing in the post-taxane setting where it's already approved?
Still leading NBRX share there, around 40%, and they're getting more traction in the community setting. There are 4,000 total prescriptions, which is up 11% year over year. Outside the U.S., growth continues too, mainly Europe, and better pricing helps.
That PSMA plus pre-taxane approval sounds like a potential game changer. What did the data, the PSMA-4 study, actually show? Why are they so optimistic?
Well, management highlighted that the data showed it doubled the median time patients lived without their cancer, getting worse progression-free survival, PFS, plus a very favorable safety profile compared to the daily pills, the ARPIs.
What about overall survival OS? Wasn't there some complexity there?
There was. The unadjusted OS number wasn't as striking, 0.91, but because many patients in the control group crossed over to get Pluvicto later, they calculate a crossover adjusted OS of 0.59. Management feels that number has been well received, and importantly, the NCCN guidelines now support using it in this earlier setting.
So how are the launch preps going for that pre-taxane group in the U.S.? What should you be watching for? Any potential bottlenecks?
They feel they've built a strong base from the post-taxane launch. They have 620 sites ready now. And a big step is the pre-filled syringe launched nationally. They think that will really help adoption in community clinics.
More staff, too.
Yep, doubled the field force, and running a big direct-to-consumer ad campaign. They did mention a lead time, though, about 4 to 7 weeks for new patients to get scans and tests done before starting treatment. That's a factor.
So uptake might be gradual at first.
That's the expectation. Initial boost from existing centers, then broadening out into community practices, urology clinics over time. They flagged it as more of a second half 2025 story. So that's a key catalyst for you to watch.
And this launch is critical for hitting those big sales numbers.
Absolutely. It's needed to get Pluvicto over the $2 billion mark and push towards that. Reaffirmed $5 billion plus peak sales guidance. They actually corrected themselves on the call. The target is definitely $5 billion plus, not $4 billion plus.
Got it. Leqvio next, the cholesterol-lowering SERNA therapy. Still climbing fast.
Oh, yeah. 72% growth in Q1. Very much on track for blockbuster status. They're seeing a steady rise in monthly total prescriptions, TRXs up 70% year on year, growth across all their target channels, and deeper penetration in key hospital systems. That's up 51%.
They changed how they're selling it.
Yeah, they mentioned evolving their field operating model to better support doctors adopting it. Outside the U.S., also strong growth, 74%. Good pricing and access in Japan, and more patients paying out of pocket in China.
What's the long-term view here? Are competitors a worry?
Management sees a huge runway still. They pointed out only about 2% of patients who've had a heart attack or stroke are currently on these advanced lipid-lowering therapies, despite growing guideline support. They feel they're on track.
But competitors are coming with less frequent dosing, right? Quarterly, 6 monthly.
They acknowledge that they're watching the landscape, but they seem confident in Leqvio's current monthly profile. And they have plans for lifecycle management aiming for less frequent dosing options themselves, but that sounds like later this decade or early 2030s.
Okay, Scemblix for CML. Sounds like it's dominant in later lines, but the focus is shifting earlier now.
Exactly. Scemblix is the clear leader in third line and later CML globally. US NBRX share is 54%. But yeah, the strategic push now is definitely driving use in earlier lines.
How's that going?
In the US, they've got good momentum from the NCCN guidelines, making it a preferred option. Got 54% of commercial insurance lives covered for the label, and the number of doctors prescribing it is growing. Seeing strong uptake in second line, 40% share there, and steady progress in first line, about 10% MBRX share, even with generic competition.
And approvals outside the U.S.
Rolling out globally. 10 countries approved for early lines now, and the EU submission is in.
There was a question about data discrepancies, right? Between their sales growth and what third-party trackers like IQVIA show for prescriptions.
Yes, management addressed that head on. They said their internal data shows 73% TRX growth year over year, which lines up nicely with the 75% net sales growth they reported. The difference some might see in IQVIA data. They put that down to the way drugs flow through the specialty distribution channel, which is common for rare diseases, not an underlying issue with demand or rebates being higher.
Right, just channel noise. Okay, Cosentyx. It's been around a while. What's keeping the growth going there?
Cosentyx grew 18% in Q1. It's mainly driven by the newer launches in HS, that's hidradenitis suppurativa, and the new IV formulation. Plus, continued performance in its core areas like psoriasis and spondyloarthropathies.
How's the U.S. looking, especially with the Medicare changes?
Strong underlying demand growth in the U.S., 29%. That helped offset the hit from the Medicare Part D redesign. They highlighted their new prescription volume, NBRX, is outperforming the market in the core indications, and they're still leading in new HS patient starts, 53% share, even with a new competitor there.
And the IV version.
Still early days, but growing, about 1,900 accounts using it now. They're confident it'll accelerate as reimbursement gets smoother and sites get more support. Outside the U.S., good volume growth too, 15% in core indications, leading biologic in Europe and China. And they've secured HS reimbursement in key markets, so confident in continued growth. And they're getting ready for potential launches in GCA and PMR based on upcoming phase 3 results.
Entresto just keeps going, doesn't it? Even with that U.S. LOE getting closer.
It really does. Another strong quarter, 22% growth. That's over $2.2 billion in global sales just in Q1. Remarkable.
And the U.S. outlook. Still banking on growth until mid-2025?
That's their planning assumption, yes. Continued U.S. growth until mid-2025 LOE. But again, they stress for you that this depends on litigation outcomes, potential settlements. That date could shift.
But it's well diversified geographically.
Very much so. Strong guideline position globally, and about half its sales come from outside the U.S. They mentioned having data protection in Europe until November 2026, and they're working on ways to potentially extend protection in Japan to 2030. Plus, the hypertension indication is doing well in China and Japan, could help drive growth later in the decade.
Let's quickly touch on their emerging renal portfolio. Fabhalta and Vanrafia. Sounds like a strategic area for them.
Definitely feels like it. They're building out what they see as a strong, differentiated portfolio for kidney disease. Fabhalta for EGON is really gaining traction. 100% volume growth, quarter over quarter, 60% more doctors prescribing it.
Are patients staying on it?
Seems so. Over 90% of patients who got prior authorization were still on treatment 5 months later. Got good commercial coverage too, 68%. And for C3G, approved in March, early signs are positive. Over 2,000 doctors are REMS certified now for both indications.
And Vanrafia, the new one. Approved in April.
Yeah, that's a once-daily oral pill for managing kidney and endothelium issues in CKD patients. Non-steroidal. Key selling point they highlighted is its clean label. It can be added easily to existing standard treatment, the RAS inhibitors. And crucially, no REMS program needed for liver toxicity or pregnancy risk, which is a big difference from some other non-steroidal options.
So they see synergies there.
Absolutely. Driving synergies across these kidney drugs, aiming to be a long-term leader in renal care. And they're expanding R&D too, with multiple new radioligand therapies, RLTs, entering the clinic for kidney-related targets.
Okay, beyond the current sellers, the pipeline is critical for future growth. What were some key updates management shared that you, the listener, should track?
Well, they highlighted their gene therapy, OAB-101 IT for spinal muscular atrophy, SMA. Positive readout in Q1 for patients older than 2. They really focused on the 5 to 18-year-old group where they saw a strong treatment effect versus placebo. They think that could differentiate it from competitors like Zolgensma.
Safety looked okay. And timelines?
Favorable safety profile reported. And they said they're on track for global regulatory submissions in the first half of 2025. So relatively near-term potential there.
What about Remibrutinib, their BTK inhibitor, especially in hives, CSU?
Yeah, chronic spontaneous urticaria. Long-term data looked good, reinforced the profile, showed strong efficacy held up for a full year, with symptom improvement starting really early, like week 1. Management stressed that rapid onset is important for patients suffering with those symptoms.
Any safety concerns cleared up? Liver profile?
Safety profile looked favorable, including balanced liver function tests. And crucially, they said the FDA had no questions about the liver profile during the mid-cycle review. That was seen as a positive de-risking event.
So what's next for Remibrutinib?
Key milestones hit. Published in NEJM, submissions completed in the US, EU, China. They've even started a head-to-head trial against Dupixent, focusing on speed of onset results expected 2027, though. They're also pushing into other indications, chronic inducible urticaria, HS, food allergy. The big near-term catalyst for you is the FDA decision on the CSU indication in the second half of 2025.
Got it. There was also an update on Voltum for Huntington's disease. What's the story there?
Yes. The phase 2 study data, which is being run by their partner PTC, is expected in the first half of 2025. Management was pretty clear. They need to see improvements in clinical outcomes, how patients feel or function, not just a reduction in the mutant huntingtin protein level to think about filing for approval.
So filing off phase 2 is uncertain.
Very much so. They said they'll work with PTC after seeing the data to decide if a phase 2B filing is feasible or if they'll need to run a full phase 3 trial. They're also watching the FDA's thinking in this area and what competitors are doing. It's a complex disease.
Ianalumab for Sjogren's syndrome. Sounds like a big opportunity, but maybe high risk.
That's exactly the vibe. They're waiting for the phase 3 SHO done results. If it works, it could be huge, potentially a multi-billion-dollar drug because there are no approved systemic therapies right now, and it affects a lot of people.
But the endpoint is tricky.
Extremely tricky, they acknowledged. The Sjogren's index score is tough to move consistently because the disease presents so differently in patients. They emphasize they designed the study carefully controlled for placebo, powered it right, included patient-reported outcomes the FDA warranted.
So what needs to happen for it to be a win?
It really needs to show an impact on specific things patients care about, like saliva production, fatigue. Management was quite candid, despite the excitement, that it's viewed internally as a high-risk study. Needs strong data on the main endpoints.
Okay. And quickly back to pelacarsen, the LPA drug. What's the update, especially with those competitors working on less frequent dosing?
Their main focus right now is just delivering that crucial phase 3 cardiovascular outcomes data from the Horizon trial. If that's positive, they want to launch fast as the first-in-class therapy using their existing heart disease infrastructure for the monthly dosing.
But they know about the quarterly 6-monthly competitors.
Oh, yes, they acknowledge them. But they seem confident in pelacarsen's current profile and the Horizon study design. They pointed out the patients in Horizon are a high-risk group, which supports the potential for a positive result. And they are working internally on less frequent dosing options, maybe annual dosing eventually, but that's more for life cycle management later on, end of decade, early 2030s.
So summing up the pipeline picture.
Overall, yeah, they feel the recent approvals and these upcoming readouts significantly de-risk their future growth. They believe this pipeline progress provides the replacement power they need to keep growing strongly through the next decade, maybe even beyond.
Okay, let's shift gears a bit. Capital allocation and their U.S. strategy. Still committed to being shareholder friendly.
That's the message. The strategy is invest in R&D and facilities for future growth. Look for smart bolt-on acquisitions or licensing deals, and consistently return cash to shareholders.
Any recent examples?
They mentioned the big one. That 5-year, $2.3 billion investment plan for U.S. manufacturing and R&D. Also closed the Antis Therapeutics deal, adding an anticoagulation antibody.
And returning capital, which did you know?
Well, they paid out $7.8 billion in dividends back in March, April, and they're continuing the big $15 billion share buyback program. Still got about $2.7 billion left on that.
That $2.3 billion U.S. investment is interesting, especially with all the talk about tariffs and supply chains. What was the thinking behind that big move?
They framed it as a strategic necessity. The goal is to be able to make 100% of their key U.S. products completely within the U.S. in the next few years. And importantly, they said this decision wasn't tied to who's in the White House.
An admission they maybe should have done it sooner.
Sort of. They acknowledged they perhaps underestimated the importance of the U.S. market or didn't act quickly enough, but they're fully committed now. They think they can build the needed capacity and time using their existing footprint.
And taxes. Any concerns there?
They expressed confidence, said their core tax rate assumption, 16.5%, is fully compliant with Pillar 2 OECD guidelines, stated they pay fair taxes everywhere, no offshore tricks.
Okay, That brings us to the wider investor context and policy stuff they discussed. Beyond the strong numbers, what were the main strategic messages for you coming out of the call?
I think the core message was Q1 was strong, validating our strategy, hence the guidance upgrade. Key brands are firing, costs are managed, and pipeline progress approvals, upcoming data is significantly de-risking the future and gives us confidence we can replace lost revenue and keep growing.
What about those external pressures? U.S. tariffs came up again. How worried are they?
They said their guidance already accounts for potential tariffs this year and medium term. Basically, they feel it's manageable. They've taken steps with inventory, supply chains, and that big U.S. manufacturing investment is part of mitigating it. Didn't seem like a major panic point for them.
And Europe, still pushing for a better innovation environment there.
Yes, definitely. They flagged the ongoing issues, prices falling, new medicines getting delayed or not launched at all, citing a figure of 30%. The industry's pushing solutions, and they hope the European Commission listens and acts.
They also got into some detail on U.S. policy during the Q&A, right? Things like most favored nation, MFN.
They did. On MFN, they acknowledge it could be devastating if it spread beyond government programs into the private market. Particularly bad, they said, if it hit Part D, Medicaid 340B, without getting rid of the existing rebates in those programs.
But manageable if limited.
Manageable, they felt, if strictly limited to Part B drugs. But their fundamental stance is opposing any import of European-style price controls into the U.S. They argued it would hurt R&D, manufacturing, the whole pipeline for everyone. They think they're relatively okay compared to some peers if it happens, but still strongly against it because of the industry-wide damage.
And the Inflation Reduction Act, the IRA, specifically that difference in exclusivity for pills versus biologics.
Yes, the 9 versus 13 years, that's a huge advocacy point for them. They strongly support extending small molecule exclusivity to 13 years, arguing it's vital for continued innovation there. They see some positive signs mentioned in an executive order, bipartisan support, and called it an absolute priority for any upcoming legislation, hopeful for a fix.
Anything else on U.S. policy?
They also mentioned pushing for PBM reform pharmacy benefit managers to fix what they see as supply chain distortions, and also fixing abuses in the 340B discount program, pointing to a recent Senate report on that.
Okay, wow. We've covered a lot. Strong results, brand momentum, pipeline hopes and risks, strategic investments, and navigating a pretty complex policy world. Which brings us to our regular segment. Remember, this is absolutely not financial advice. Just us thinking out loud, like analysts brainstorming, based only on what we heard in this specific earnings call. Purely informational.
All right, let's hear the outrageous but plausible pitch for this time.
Okay, here's a thought, based purely on their commentary. Management sounded really focused, almost insistent, on the Pluvicto launch inflection coming in the second half, especially for that pre-taxane group. They spent a lot of time detailing the specific steps, doubling the field force for community outreach, the pre-filled syringe launch, the ad campaign, getting 620 sites running, all aimed squarely at building capacity outside the big centers.
Right, and they reaffirmed that big $5 billion plus peak sales number.
Exactly. So the idea of the catalyst is that their execution in the community setting ramps up much faster than the market expects in the second half of this year. Management talked about the 4-7-week lead time, sites not yet at full volume. But they also detail how they're tackling those issues, changing field force structure, working on imaging capacity, smoothing reimbursement.
So the outrageous part is betting they overcome those hurdles faster than seems likely.
Precisely. Betting that their operational execution is so good that the H2 ramp significantly beats consensus, getting them towards that $5 billion plus peak potential much faster than anyone thinks is possible right now, despite the known challenges.
Okay, so the thesis boils down to their detailed focus on fixing Pluvicto's operational bottlenecks in the community unlocks a surprisingly steep adoption curve for the pre-taxane launch, beating expectations and validating that high peak sales target sooner rather than later.
That's the pitch. The potential upside for you, if you were considering this purely speculative idea, is seeing Pluvicto's revenue contribution jump faster than models predict. The obvious downside is, well, rolling out complex RLTs in the community is hard. The lead times stick around, reimbursement snags happen, competitors make noise, and uptake remains gradual, just like the market already expects. It's a bet on exceptional operational execution against known significant barriers.
Interesting. Definitely ties into one of the most emphasized points of the call, both the opportunity and the execution challenge with Pluvicto.
So pulling it all together, what's the main takeaway for you thinking about Novartis after this quarter's update?
It was undeniably a very strong start to 2025. That allowed them to upgrade the full-year guidance. Performance was driven by that robust growth in key brands plus good cost control. They also highlighted significant pipeline progress and those strategic investments, like in the U.S. footprint, that they believe position them well for growth, even with policy headwinds and patent cliffs on the horizon.
So they seem confident they can navigate the challenges and hit their growth targets.
Based on this call, yes. That confidence seems grounded in the current portfolio's performance and the tangible progress they're making on key launches like Pluvicto and advancing the pipeline.
Okay. As always, remember, this discussion is just our summary and analysis for informational purposes. It's not financial advice. You should always do your own research and talk to a financial advisor before making any investment decisions. Definitely check out the full source materials yourself.
Thanks for joining us for this deep dive into the Novartis's Q1 call.
And maybe the final thought for you to chew on is this. The quarter looked solid, yes. But can Novartis's strategic moves and pipeline potential truly outpace the combined and likely accelerating pressures from major patent expiries and an increasingly tough policy environment, particularly in the critical US and European markets? That's the real tightrope they're walking. Thanks for listening to The Deep Dive.